look at let's look at gold on 1 hour time frame. After seeing how the yellow metal market makers have taken out over 1,000 pip from the price of the precious metal, and it feels good. Correction is part of the market, and it's technically nothing to worry about. So this becomes our new litmus test for buy continuation in line with the trend. So in the future, if you have a breakout from here, then you have confidence to go long. And now price in its usual fashion, building liquidity, building a sell liquidity on this descending trend line, 1 hour descending trend line, building sell liquidity. And on the floor, we also have buy liquidity connect with this. This also a low. And when price came here, it has bought up to this level. So we are going to connect it. And that was how we were able to predict that buy at 2000, 3,207. Go check my previous post. I was very specific. I was very specific about that. And I told you that price was going to buy at that level after carefully pointing out this area of support. So my previous post, I made mention of key areas to watch in price, and that was very specific at 3,207 as a preferred zone, and the price came and reacted at that level. Now, what we expect at the moment is to see if it is possible that we will move from here to retest a broken demand structure. So we have a 1 hour broken demand structure that have held price actively on multiple times. We have enjoyed buy opportunity on that roof. So now we break out from that structure. We expect that SAU should go to that area and continue to sell from there. One of the few things that I've learned recently is to stop to predict the market and just read the market. Predicting the market is pointless because you do not have the liquidity to control the market. So we are trying to read the market, what the market is doing. So what we are saying here in essence is that price broke out from a demand floor. This is a demand floor. This is the most important character right now to us. We have a breakout from a demand floor. And that breakout from a demand floor calls for a retest. But however, the price action is in a descending bearish channel. The channel is descending, trying to bring price down. So it is possible that price might as well ignore this and maybe come here, respect it, and move up. Then return and continue upswing. These are case scenario. So what we are supposed to do is to watch and see. We watch and see. We cannot say this is exactly what will happen, but we are watching to see if price comes here and break the previous demand structure and we see it successfully retest, then we are going up to go retest this long descending trend line. So this is what we are going to watch, and instead of trying to predict the market, we watch the market and play along. One of the key things that everyone must learn is stop predicting the market, watch the market, and follow the market. By doing so, it will be easier to change your bias from buy to sell and sell to buy. You see, predicting the market makes you stiff. When market is changing from bearish to bullish, you find it very difficult to change bias. But when you are following the market, you are following him wherever the market goes. If the market go up, you go up. If the market come down, you come down. You cannot say it will go up or it will go down. So this is one strategy that I have learned and I want to share it with you. Don't predict the market, follow the market. Follow the market. If the market is going up, follow him up. You go for a buy. If the market is going down, you follow him down, you sell. There is no need to predict the market. Predicting the market is going to make you lose a lot of money. You are going to lose money trying to predict the market. The reason is because the market is driven by liquidity. That's the reason. The reason the market is driven, the financial market is driven by liquidity. So you can never be accurate trying to predict the market because you do not have the money. Do you have the money? Do you have the money to predict that gold will get to 5,000 per ounce? You cannot do that. But you can follow gold to 5,000 per ounce. Do you have the money to sell gold to 2,300? No, but you can sell gold. If the market is selling, you join them and sell down. So let us follow this mindset, follow the market, don't predict the market. Don't say what the market will do next because you do not have the money. You are not a hedge fund. So you're not a central bank. You are just a trader. So this is a strategy that I've learned never to predict the market, but follow the market. Following the market allows you to change bias when things are not going the way you expect. You look at what the market has done and you make an immediate adjustment so that whatever you are doing aligns with the overall objective of the market at that moment. So whatever you are doing must align with the objective of the market. If the market is selling at the moment, you have no reason trying to look for a support opportunity. The market is selling. Continue to sell it so that you join the force of momentum, breaking support. If the market is buying, you join the force of momentum, breaking resistance. Don't try to predict the market, please. This is a strategy. It's worth more than $1 million. Predicting the market has never ended well. And predicting the market, it's something that a lot of people do, and we must learn it and we must stop it. Just to follow the market. Follow the market. So my strategy is just to follow the market. Don't try to predict it. No prediction, no prediction, so that it will be easier to change bias. The problem with traders is changing bias. It is difficult to change your bias. So what we are seeing is we don't know to what extent, but we will watch because we are following the market. So if the market gets here and respect it, it's okay. It comes down, take away the structure, and we go this way. That is case one. So the next thing is if price comes here and decides that he wants to break here, then we want to sell this market to this roof in anticipation that it will break it and see price return back to retest the current all-time high. But before that, we're going to look at on 30 minutes and see where we got another beautiful price action that might also present itself as a resistance to upswing. So if we come to that point and we are looking for resistance to upswing, then let's look at it on 1 hour. And it should make a whole lot of sense if we're looking at that on 1 hour. Let's see if we got something here. Let's see. Let's look at 2 hours if we find something. So here we have a very nice price action at this level on 2 hours time frame. Like I said, playing with multiple time frame enables us to see where the market is going, and you can see by Tuesday after a break of structure, you see what price have done here. The demand floor, break of a demand floor, break of a demand floor, supply roof, break of a supply roof. Price came back because it picked liquidity from the roof and failed to break the supply roof, and the market started falling from there. It started falling from there. That was a sell confirmation. That was a clean sell confirmation, uncontested sell confirmation. And from that level, we have seen that a lot of traders who are trading market structure have seen that and open a short position, and you can see what price have done there. They sell that market down. So what we want to see at the moment is if it is possible that market can continue to move until it gets into 75 level. I think a recovery into 75 level, over 500 pip move, it's possible. Then market will begin to drop from that level. So a push into that level will open a new era of sell where other smart traders are also waiting patiently to go short. They are waiting at this level to take a short position. So I believe other traders are waiting at this level for potential short position. I think this was quite on timing after seeing what price have done there, peak liquidity on this rejection level. That was a nice one on 2 hours. You have seen price pick up from 206, and I predicted 207 as a preferred zone, which was still on confluence where we have a descending trend line meet a horizontal demand floor. And on that note, you have seen that gold found support, and they are still struggling it. But I know that market will go back to retest this structure. At least we'll owe here a retest, then we'll come down. Owe it a retest, then come down. By then, we'll have already built up a buy liquidity on the descending trend line, then we take it out. So this is what I see. Shavyfxhub.